And the eco data flow continues. Let's get to Rick Santelli this morning. Hey, Rick.
Good morning, Carl. You know, our July final read for Markit PMI, which goes back to 2017, is out. And it takes out this 51.3. That was a mid-July read. It's now replaced with 50.9, 50.9. The good news, it's over 50, so it's an expansion mode. But it did digress just a bit, and 50.1 is the best level, well, since 50.7, that was a February number. We will have ISM national number coming out in about 15 minutes. And if we look at what's going on with 10-year note yields, fascinating. We're up 3 basis points. Curve's actually steepening today with twos being unchanged. And maybe that two-day chart shows us the most important issue, and that is we settle a bit under 53. The old all-time low yield was around 54 basis points. So Friday, we finally took out, go back to March 1st, that March 9th low yield close and replaced it with a bit under 53. Now, that might not sound like an important deal. Well, in a way it is, though. We've all known it was most likely coming. Treasury rates continue to compress. The Fed still says lower for as long as the eye can see. And, of course, with Congress continuing to debate with regard to whether we're going to increase the deficit some more, it really creates this dichotomy of how debts are going up around the globe in a huge way, but interest rates are not only going down, pretty much sovereigns are making pushes to all-time lows. Finally, foreign exchange has been dominated by weakness in the dollar. Its July was down close to 4%. But, boy, we've had a couple of days of bounces. This chart is the 2-day of the euro, which is the mirror image. You can see it's lost a bit of ground. We see our COVID spikes in the U.S. maybe moderating a bit. And we may have, according to some of the reports, overemphasized some of the positives of the euro economy. Listen, if we look at GDP, whether it was Spain, whether it was Germany, if you looked at it annualized, even though the U.S. wasn't terrific, it was still better than most of those European economies, especially Germany. And so the debate goes on where investors are best served. And at least for the moment, the dollar index popping a bit and the euro taking a step back. Carl, Jim, David, back to you.